The back end flagged it. The 30-year Treasury yield eased to 4.86%, holding below the resistance that capped it earlier this year, while the dollar sat near 13-month high. Bitcoin's bear market deepened, and the S&P closed flat. We finished with today's top-ranked ETF and stock from SignalFinder Pro's Best of Best. The S&P 500 gave back its entire intraday bounce and closed at 7,358, down just 7 points, basically flat, but the weekly signal flipped bearish. QQQ and the broader Nasdaq fell on the session, though the Nasdaq 100 closed positive, carried by a single big mover, while the rest of the tape sagged. Triple negative divergences have now stacked up across daily, weekly, and monthly timeframes on both SPX and QQQ. Surface read, quiet. Structure underneath, not so much. The 30-year Treasury yield eased to 4.86%, holding below the resistance zone that rejected it earlier this year. DXY is sitting near 13-month highs, and while today's inline PCE print slightly eased rate hike expectations, the hawkish backdrop isn't going anywhere. Here's a number the system pulled up. U.S. net interest expense now accounts for 20% of total tax revenues, the highest reading since the 1990s, and is projected to climb to 29% by 2035. TLT and the 30-year are parked at a crossroads with no clean answer. Energy is showing breakout structure, but the geopolitical backdrop keeps the outlook contested. XLE cleared multi-month resistance, and USO posted a new year-to-date high, closing up 0.72%. Oil surged above $109 a barrel before pulling back to around $106, partly driven by Strait of Hormuz tensions that now have a 60-day diplomatic window to work through. With oil up roughly 80% year-to-date, it's feeding directly into the inflation read the macro picture is already wrestling with. XLE's chart looks constructive. The Hormuz risk and OPEC fracture uncertainty are the variables the system can't model out. Gold pulled back roughly 20% from its peak, and right now, the hawkish Fed repricing plus dollar strength are both pressing on GLD and silver near term. But the structural bid underneath isn't budging. Central banks have collectively purchased over 1,000 tons of gold per year for 4 consecutive years. A new survey clocked 45% of central banks planning to increase gold holdings over the next 12 months, the highest reading in that survey's history. Near-term price action and the long-term structural story are pointing in different directions on the metals chart right now. All 4 international anchors, EFA, EEM, EWJ, and EWT, closed in the green today, a clean sweep across developed and emerging markets. Japan and Taiwan both posted gains, and the broader emerging markets read held up alongside them. The catch the system flagged? DXY is still parked near multi-year highs, and that's a structural drag that doesn't just disappear overnight for any of these names. The day's read is bullish across the board. The dollar overhang is what keeps a full confirmation off the table. Bitcoin's risk model is bearish, and the data is stacking up to back it. BTC is down more than 30% from its May 6th peak, and a death cross is forming, with the 50-period moving average crossing below the 100-period. Volume distribution has confirmed the downtrend since May, and negative ETP flows are piling on across the broader crypto space. The 300-week moving average near 54,000 is the primary near-term downside level the scan is watching, with a wider support zone spanning 49,000 to 55,000 on the weekly chart. Best of Best filtered down to 92 symbols today out of the full SignalFinder Pro universe. Technology, industrials, and materials are all showing leading states in the system's current read. XLK ranks first at 184.57, up 0.83%. XLI ranks second at 184.12, with a strong 2.17% gain. And XLB sits at rank 4 at 51.84, up 1.33%. That's where the relative strength is concentrated right now. On the sector board, technology is holding the top slot, XLK at 184.57, up 0.83% on the session. Industrials aren't far behind, with XLI ranked second at 184.12 and posting a 2.17% gain. Materials rounds out the board at rank 4, XLB at 51.84, up 1.33%. 3 separate sectors leading, that's a broader dispersion of strength than a single pocket move. The top-ranked ETF in today's Best of Best is ARKG, the ARK Genomic Revolution ETF, clocking in at 40.11, up 3.97% on the session. That's a notable move in a day where the broader market closed flat and macro is running mixed signals across the board. ARKG is ranking first across the full 92-symbol shortlist, and genomic biotech is surfacing at the top of the scan in an environment where most other reads are contested. Sitting at rank 1 for stocks in today's scan is HWM, Howmet Aerospace, closing the session at 273.14, down 1.06% on the day. Red day, but still ranked first across the 92-symbol shortlist, which makes the structural position worth noting. Howmet is an aerospace components and advanced alloys name, and the system surfaced it as the top-ranked stock in the full best of best universe today. That's the full system readout for today. The 30-year Treasury yield eased to 4.86% after rejecting at resistance. The SPX weekly turned bearish. Bitcoin's down more than 30% from its May 6th peak, and all 4 international ETFs held green. Best of best shortlisted 92 symbols, XLK, XLI, and XLB led on sectors. ARKG topped the ETF list at 40.11. HWM held rank 1 for stocks at 273.14. Verify both live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.